Hi there, today we're going to have a look at this idea behind money. Now, we've studied economics for quite a while, but we've never really looked exactly what money is. So what I want you to do, first of all, before we start, is just think about this question you've got here, so you do it now. What is the point of money? I'd like to pause the video for about 1 minute, then press play again when you've come up with an idea of what you think money actually is. Okay, hit pause, please. Okay, so you've unpaused it, now you're ready to go again. So, have a think about what your definition of the point of money being is. Why do we have it? What's it used for? Why have we come across it? What is the general purpose of money? Now, what you need to look at within economics is why we have it, what are the features of it, what are its functions, how does it work? Now, money in itself needs to be durable. It needs to last. It needs to be able to be used from 1 week to the next. It's no good having a currency which is ineffective 6 months after you start using it. That will just basically lead to mass problems about exchange and how do we actually purchase and trade in goods. It end up taking us essentially back to the dark ages where we didn't have a relative useful currency. It also needs to be portable, so you need to be able to carry it around, you need to be able to transport it. It can't be something which is so difficult to actually move that you can't use it. In modern day, obviously, we have our notes and our coins and our electronic cash now, so we don't even need to carry a physical piece of money around with us. It needs to be divisible, so you need to be able to break it down. You can't just have a note or a coin, which is a value. It's got to have smaller denominations, so you have something to barter with, negotiate with, and be able to purchase in different sizes. Now, this is a problem which has started to arise with the current trend of cryptocurrencies, and later on you'll be able to have a look at this and see why this is such an issue in this function. It's also going to be hard to counterfeit. You can't easily copy. If it was so easy to copy, anybody could fake it. You'd end up with a huge supply of money on the market. And we know from our studies of supply and demand, if supply goes up, the value of something dramatically decreases. And this will cause all sorts of problems because no item has a set understanding of how much it actually is. It also must be generally accepted by the population. It can't be a currency the government brings in and then everybody ignores. We have situations which we've seen in the past, for instance, in Russia in the 1990s and the 2000s, where you could use the ruble, but most businesses would rather have taken dollars. So the nation's currency became essentially worthless because nobody wanted to use it. Everybody wanted to use US dollars because they're easier to trade abroad. It's also got to be valuable. So it's got to hold a value over a period of time. So £10 has got to be worth £10 today. It's got to be worth £10 in 10 years' time. It's got to hold its value in relation to what it can purchase and what it can buy. So what we start to see is we start to see the impact of inflation, etc. on money as well. Now, the key functions of money are another area which you need to be understanding. Now, the previous slide, you may want to rewind and make some notes about what was on the screen there because you do need to know these facts. Well, the key function, it's a medium of exchange. It's used to actually make trading of goods so much easier. Previously, hundreds and hundreds of thousands of years ago, we used to have barter systems whereby you might trade your 2 camels for your 3 horses, depending on what products you actually wanted. But the function of money being a medium exchange meant that this was legitimised, it was standardised, so you knew if you paid £100 for something, you got £100 today, you got £100 tomorrow as well. It wasn't suddenly, oh, well, I need those camels more, so I'm going to ask for more horses for it. So we created a system of exchange which is far more understandable. It's also a store of money, so we can have a store of value, so we have an asset which is worth something, so we can then perhaps exchange it for a value later on, which allows us to have a specific value for an asset, which we can then buy and trade, and we can use it as well in the future. It's also got to have what we call a unit account. This refers to anything that allows a value to be expressed in an understandable way. So it allows us to say, yes, that TV is worth £399. That TV is worth £599 because. So we have a set value, so we know if it's worth double the price, it should be better quality, or it's more desirable, or it's more valuable. And that unit of account makes us understand this. It also has a standard of deferred payment. So basically this allows us to create a debt system. So if, for instance, you borrow money off somebody, or if you purchase something off them in order to pay back in 3 months' time, you have a legitimate way of creating a value to the currency. So, for instance, I'll lend you 20 quid today. I say that as long as you pay back at the end of a week, you'll only owe me £21. So we work in a system like that, a value. So therefore, the borrowing actually has a value of £1. So we have to start to understand the value of doing trade and doing action. Okay, if you want to pause this here, make a couple of notes on these key functions of money. You may want to scroll back to the previous slide as well to make sure you make those key points as well. Okay, your first task today. I want you to have a look at an article which you'll find on the VLE in the section which says Year 2, Paper 2. Now, the first task is looking at the development of money. So I'd like to read through this task, and then I would like you to answer the following two questions. Why does money provide a more effective means of payment than barter? And what are the advantages and disadvantages of using cash as a main form of personal wealth? So you may need to have a look back at the idea of wealth, what we actually mean by wealth, and how we measure it. So I'd like to spend 15 minutes having a go at this task. I'd recommend that you pause the video in a minute, a couple of seconds, have a go at this, press play again when you're ready to go, and we'll continue with a slide. Okay, pause it. Okay, welcome back. So you'll complete that task. As I said at the beginning, we're going to have a look at the issue of cryptocurrencies now. I'd like to have a little look at Bitcoin. I know there are lots of different currencies out there we've looked at in the past. I know they're probably of particular interest to you because we've had a look at how they've developed. So what I'd like to do is, once again, in a minute I'll tell you to pause. I want you to pause, go online, do a little bit of research into what Bitcoin is, and have a go at answering this question: is Bitcoin real money? I'd like to formulate an argument on two sides. So the arguments for Bitcoin being real money, the current arguments against it actually having real value. Okay, I want you to get on with some work, 10-15 minutes of research and write up, make it 20 minutes, now pause. Okay, so you're playing again. So you will probably have done a little bit of research into what you think Bitcoin actually is, what it's worth, and whether or not it's a real currency and if it's real money. You may have come up with some ideas such as this, looking at the history of it. So we know it's new. We know it's completely lacks any sort of physical presence. We know it's very volatile. The pricing is going up and down minute by minute. And for some people, they do view it as a real currency. Some don't at all. It all depends on things such as how many places take the transaction, how many people use the money, but more importantly, how much value we place on it ourselves. Bitcoin as a case study is really, really useful for examinations just because it's a very, very good chance that something like this may come up in an exam just because it is such a growth market. Okay, what we also have to think about is the factors which affect the supply of money. Now, we're going to come on later on in the course, probably the next week or two, looking at how the government controls the supply of money, how it values and rates our currency. So knowing a little bit about this is really, really important. So what we have is this idea of an open market operations. So this is something called quantitative easing. So something we're going to look at in much more detail, but this is all about the government buying bonds to create money. We're going to have a look at bonds a bit later as well. Now we're going to have a look at reserve requirement imposed on banks. So this is a percentage of deposits made by customers of a bank that the bank must keep hold of rather than lending out. Because we need our cash. We can't just give a bank money and expect them to use it all. We have to go and physically get cash sometimes. Banks, therefore, have to have a certain amount saved. Now, there's also the interest rate set by the Bank of England. That's going to really influence how much money is out there. Obviously, if a bank rate is really low, then we might have a desire for more money because people are borrowing it. So we start to see the impact about the amount of cash out on the market being used. There's also the big impacts of demand for money is going to have. So we're seeing interest rate issues, seeing the value of monetary transactions, and several other factors which we are going to look at a later date. Now, I'd like to have another go at a task. So we're going to think now about how money is created. So, in your view, how is money created? Pause for a minute and come back to me. Okay, so you paused and you come back to it. Didn't you know? Have you struggled really, even without any research to figure it? Most people don't know. Hardly anybody in the economy really understands it, including the so-called experts who are actually running our economy. They don't really know where money's come from. I was asked this question a couple of years back. I didn't know. I had an idea, but I couldn't really describe it perfectly well to people. I've got an idea from an academic point of view, but not really from a fully practical point of view. So in VLE, I've got another article, How the Actual Magic Money Tree Works. This is obviously a relation to the idea during the last general election where Theresa May announced that there was no magic money tree in response to the Labour Party's proposed spending plans. Obviously, we do know that a magic money tree does exist, being that Theresa May did manage to find a huge amount of money to buy her way to keeping control of the country by basically giving £1 billion over to the DUP in Ireland to support most of her decision making. So, magic money tree clearly does exist, but we need to have a look really at how this works. So, if you could pause now for about 15-20 minutes, read through that article if you want to print it off, and then I'd like you to summarise how new money is actually made. Okay, pause. Right, now we're going to finish off. Next couple of lessons, we need to be having a look at two ideas, narrow money and broad money. What I'd just like to do is have a quick read through these two definitions, write them down, and just think about why these might be useful to us in the next couple of lessons. Okay, 3 minutes, have a read through, make a note of these. Okay, excellent, you've had a couple of minutes to do that. Now, to finish the lesson, what I'd like to do is some preparation for the next session. I'd just like to watch a short video. It's one of our favourite American economists. We quite enjoy watching his videos. And I would just like you to create a little table after you've watched the video and do some research of your own to define what we mean by financial assets and financial liabilities, which I've wrote as financial assets twice, and then come up with some very, very clear definitions of the two. Okay, thanks very much. I will hopefully see you soon, and we will move forward and have a look at what financial assets and liabilities are. Thanks very much. See you again. Bye.